Good day. Welcome to another Answers Weekly Wraps. I'm Viv Govender, and as usual, what we'll do is I'll start out with a general market segment and then end with a tech segment. So, in a general market segment, we'll cover three topics. Firstly, the ongoing chaos in the US elections. The second thing is interest rates, and the final thing would be a sector rotation that's happening in the US at the moment with regards to small caps and large cap stocks. In our tech segment, we'll look at two things. The first one would be the latest in the EU regulations regarding AI and how it's affecting the continent. And then we will look at a little wrap up of what I discussed last week. I just want to make a bit of clarity as to my argument around what's happening with AI, the possibility of a bubble. Okay, let's start off with the US election. For those that don't know, Donald Trump there was an attempted assassination of Donald Trump. The motives of the gunman are unknown, but people say he's Republican, some say he's Democrat. It's probably just a crazy guy that basically thought there was a chance of committing suicide, but becoming famous while he did so, and that obviously was quite an uncertain, quite a volatile situation. Talking about like a couple centimeters, and Trump would have definitely been dead. Even 1 centimeter, he'd probably be significantly injured. And this is basically came out of it with nothing more than a damaged ear. The Republican National Convention is this week. Trump spoke. He chose his vice president candidate, GD Vance, which I'll talk about in a second. We also had Hulk Hogan and a couple celebrities like Kid Rock, etc. on there, and including former girlfriend of Kanye West, Amber Rose. That's another weird story. But yeah, the Republican convention happened. The usual what you'd expect from this kind of stuff. Trump's conventions have generally been quite chaotic, but there was a bit of conciliatory tone coming through, which I think is important in the current environment. So why do I want to talk about J.D. Vance for a bit? Well, J.D. Vance is a bit more disciplined policy-wise than Trump is. And so it's worth looking at what his policies are, because they may be Trump's policies going forward. He believes in a couple of things. Firstly, he believes China is the number one threat to the US. He believes that the dollar should be weaker. And he believes in strong industrial policy for the US and kind of isolationism/protectionism to help US workers. To give a background to this guy, he basically is what we would term a hillbilly, not a derogatory term. It's mentioned like what kind of background he comes from. It's from a place called Appalachia or Appalachia, depending how you want to pronounce it. Apparently, the people in there call it Appalachia. Like I said, a hillbilly, very poor background. His mother was a drug addict. He was raised by his grandmother. And it kind of gave him like a big chip on his shoulder about the way the world treats people like him. He later went to the military. He graduated summa cum laude from his university. Then went to Yale, became a lawyer, married a woman basically who clerked for the Supreme Court. Really moved up in the world, but he never forgot the grudge he had. And I think what he's trying to do right now is kind of do things that he believes are best for the people that he left back home, which includes, like I said, protectionism. There was also a statement from Trump about Taiwan, and this is also important with regard to Vance, about how Taiwan doesn't do anything with the US, and the US basically should hold back on protecting Taiwan until Taiwan gives the US something back in return. Now, why is this important altogether? Well, if the US is going to produce or is going to pursue this kind of policy of protectionism, of isolationism, etc., that leaves the world much more open to players like Russia and China, who are going to be obviously taking a stronger role in the world. But also, it's going to affect them in another way, because if the US is going to be basically more protectionism instead of saying, okay, we're going to try and isolate, or try and not deal too much with China, they're also going to try and block more stuff to China. Trump's plans so far include 60% tariffs on Chinese goods, and then possibly a 10% tariff to everyone else, including the EU. That probably will be negotiated down depending on bilateral deals, which he's very fond of. But we did see the chip market react really badly to this. Why? Because if they're going to be pursuing more of an isolation policy against China, they will probably ban the export of chips from more and more like chip machines, etc., from ASML to China. And if TSMC is in Taiwan, as it is right now, it's called the Taiwan Semiconductor Manufacturing Company, and the Chinese invade, then obviously you would find that they'd be negatively affected. So we did see a big drop down in chip stocks this week, and possibly, like I said, due to some of the policies that were more clarified by Trump and his vice president. In other political news, it looks very likely that Joe Biden will not be running for president of the United States, and will probably be looking to leave in the next week or so. We've seen a significant sea change where senior leaders such as Chuck Schumer, Kevin Jeffries, these are big leaders in the Congress and Senate. Even Barack Obama has come out with some kind of sly statements saying that he should reconsider his re-election bid. He also has COVID at the moment. This is Joe Biden. All of this combined means the likelihood of him leaving, according to betting markets, has gone up. It's almost like a 3-to-1 kind of ratio at the moment. That he's probably going to be leaving quite soon. However, note that there is a limited amount of time before he can leave. I'm talking about like the next few months is too long. It's not going to be the next couple of months. It has to be the next few weeks, quite frankly, that he has to leave, because they have to reorganize this party. They're going to make sure the right person's on the ballot, etc., for the Democrats. And if they don't do this, in time, it'll be a huge issue when it comes to the election. Okay. Now moving on to the next topic, interest rates. We in South Africa kept interest rates flat, to be expected because of the issues around our dependence on international trade, etc., which meant that if we had cut interest rates before the US had cut interest rates, the rand would have weakened, and we would have seen a significant return of inflation, negating the whole advantage that we had before. So we had to keep interest rates flat. The US is likely to cut in September. We may cut in September, we may cut in November, but we're not going to cut before the US unless the Reserve Bank is going to be very, very aggressive. The last meeting, it was basically 4-2, 4 stay stable, 2 stay cut. So kind of indicating that they're looking to cut, but like I said, they'll probably wait till the US cuts first. And speaking of the US, so we had some jobs numbers come from the US, slightly weaker than expected. More recent inflation numbers from the US, slightly weaker than expected, all indicating that the chance of a rate cut in September is pretty strong at the moment. If we cut in September, that might be another cut coming in before the end of the year. A couple of cuts, was less than we were expecting basically at the start of the year, but from a few months ago, this is an improvement. Okay, and then now moving on to the sector rotation we discussed. If you look at the stock market for the last couple of weeks, you've seen a big movement. Chip stocks have come down, but so have a lot of the magnificent 7 companies. You're talking about Microsoft, you're talking about Apple to a certain extent. You're talking about like these big companies that have done really, really well over the last year or so. They're starting to fall a little bit. And the things that are coming up are things like the Russell 2000. Russell 2000 is the index of the smaller companies in the US. And this kind of rotation kind of makes sense if you think of it from this point of view. If you expect interest rates to fall, you expect things that have underperformed because interest rates were very high to maybe outperform now. And things that have underperformed often have been smaller companies that have higher financing costs, that are more vulnerable to gearing, etc. And if we're going to see interest rates basically start to fall, these companies may be able to expand better, maybe be more stable, and maybe play a bit of a catch up with some of these bigger companies that have been doing really well over the last couple of years. That is one approach to this thing. That I think is a reasonable idea if interest rates do fall significantly and go on a falling path over the next several years, because it's going to take a couple of years to reverse the interest rate hiking cycle that we saw. Markets were also, central banks were pretty aggressive hiking interest rates, and they've been pretty cautious cutting them at the moment. And so we'll at least look at a few years before interest rates are down to where they were before the hiking cycle happened, if they ever do get there, by the way, which you need to talk about. Okay, so we are seeing the sector rotation. We have seen a big pullback in, like I said, the chip companies, especially ASML did really badly, down double digits. TSMC, strange enough, has done quite as bad as ASML, but it's also come down. Nvidia has come down significantly, but remember, Nvidia has rallied up massively. We even saw a bit of a drop back in Tesla, which has also done incredible returns over the last couple of months. Companies like Microsoft, it's Meta especially, has also pulled back a bit. And speaking of Meta, this is our tech segment. Meta recently announced that they would not be releasing their newest version of, which was the Lava 3, which is due to come out, I think, in 5 days as I speak to you on this Friday. So basically, in the next week or so, we're going to see Lava 3 come out. Lava 3, if you don't know, is Meta's version of GPT-4. the chatbot or Claude 3.5 or whatever. It's going to be that level of LLM. Basically, it's, if not at the cutting edge, just below the cutting edge of what is available right now in the marketplace. And it's going to be open source, which means that it's going to be available. You can download it and you can do with it as you please. And the problem that Meta is having with the EU is that the EU has these laws in place around privacy, etc., that kind of won't work with Llama systems. And the Llama, also Meta is saying that, or Meta / Facebook is saying that, rather than make the risk, they're just going to avoid the EU entirely. And this is a huge danger the EU is facing at the moment, and we have to talk about this. The EU is a huge economy. There's a lot of people. Economy-wise, just look like a dollar basis is equivalent to the US. People-wise, it's larger than the US, but it grows much slower, and on a person-to-person basis, it's poorer. Now, over the last couple of decades, the EU has really fallen behind. I mean, there was a point, in the later half of the 20th century, where the Europeans were catching up quite strongly to the Americans. In fact, the growth rates in places like Italy and Germany and stuff were pretty good. But if you look at what the EU growth rates have looked like in the last decade and a half or so, pretty much ever since the financial crisis, even before that, it's been seriously lagging what's happened in the US. The US has really left them behind. And the EU basically uses its power, its size, to kind of regulate a lot of industries out there, especially like in the tech industry. They've gone after Twitter, they've gone after Microsoft, they've gone after Meta, Facebook, they've gone after a number of Google, Alphabet, even Apple has been affected by them as well. And because they are such a large market, it allows them to basically say, okay, if you want to beat our market, then you've got to do the things we ask you to do. Now the problem is that these regulations are getting more and more onerous, and things like OpenAI and things like these LLMs not having a business model that really relies on the huge amounts of revenue from clients. Right now, it's all about the hype cycle. Yes, there's billions of dollars of revenue coming to OpenAI, but compared to its market capitalization, it's not anywhere near enough, which we'll talk about in a minute as well. They are able to basically, in fact, even worse than that, because of the cost structure of these LLMs, the more clients they have at the moment, the worse it is for them, because they actually lose money on every transaction that they do. So the threat the EU is giving is not as strong as it once was. And so a lot of these companies, including, like I said, we talk about Meta, but also Apple is also talking about avoiding some of this AI technology in the EU. The EU is in danger of basically overplaying its hand and effectively being cut off of the AI revolution that's coming. Because if you regulate yourself to such a point that nobody wants to deal with you, yes, you don't have all the law breaking that you're fearful for, but you also don't have any of the technology that's coming along. And we do believe the technology, is quite useful. It's quite important. And the EU is, I think, this is a self-inflicted wound that could be quite significant in the future. Now, finally, I want to come out and just discuss what I discussed last week about the bubble around AI. And people have asked me to just clarify things. So I just want to make it more simple and more clear to you guys exactly what my thinking is around this subject. Okay. Now, from a rough, calculation, I've come to the conclusion that about $5 or $6 trillion worth of value in the market right now is due to AI companies or AI attributed, valuations. We're talking about the piece from Apple that you could say came up after the last, Worldwide Development Conference. The improvement in NVIDIA and in Microsoft that we've seen over the last bit of time. The valuations we've seen for things like Claude and for things like OpenAI in the market. Even you can look at Tesla and how much of Tesla's valuation is built into the idea of self-driving vehicles, which is a problem for AI. Doing that, you can come up with a number of about $5 trillion, $6 trillion, not about there. Now, let's just say we would say that value would need to come back to like these companies over the next, say, 10 years or so, which is not a tough ask to say. It's a reasonable thing to say. We would think we want to see at least that amount of value coming to these tech companies over the next 10 years to justify the current valuations. Okay. Now, how much value would AI have to create to the world that these tech companies could take $5 or $6 trillion of value out of that? Now, it's not going to be 100% of the value being taken by the AI companies. Generally, we think around about, say, for platforms like Microsoft, you can say it's 5 to 10%. But let us be very generous and let us say it's going to be 20%. So 20% of all the value AI creates, these AI companies will be able to take, it for themselves. 80% goes to the rest of the world, but 20% is given to the AI companies. If 60 or 6 trillion or 5 trillion is 20%, the full number is between 25 and 30 trillion dollars. That kind of makes sense, right? So AI has to create between 25 and 30 trillion dollars in the next 10 years to justify the 5 or 6 trillion dollars of valuation we have in AI companies right now. Okay, what kind of number is 25 to 30 trillion dollars? To give you a perspective, the total global GDP is about 90 trillion dollars. 90. So we'll be looking at AI companies adding roughly, let us say, a third, 1/3 of total global GDP value right now over the next decade. How much would that have to be? 2 to 3%. That's what we're talking about. 2 to 3% extra growth beyond what the normal growth rate would have been because of AI would need to occur over the next decade. This is 2 to 3% growth per year over the next decade to justify the current valuations on these AI companies. That is what we're looking at. That has to be the amount of value AI adds to justify this. Okay. Now, is this possible? Yes, it is possible, especially if there's maybe like Bill Gates said, he thinks there's at least 2 more cranks of this AI, scaling thing. So 2 more cranks would mean GPT-4 would be basically to GPT-6 as GPT-2 is to GPT-4. That's a huge jump up. If GPT-6 is as much better than GPT-4 as GPT-4 is better than GPT-2, AI would create this kind of value easily. So if that is true, okay, that's obviously going to change the way the world works. We talked about interest rates before. If the world's growing at 4%, it's called 5% per annum in terms of annual growth rates, that is not a world in which interest rates are falling significantly. That just does not happen. The idea that interest rates are going to be falling when the growth rate is 5% globally, not going to happen. Why? Because at 5% growth rates internationally, we are talking about an extremely tight market. We will be talking about massive inflationary dangers. And even beyond that, we'd be talking about, capital being really highly in demand because you would be able to take that capital and make a lot of stuff out of it. And therefore, people will be building up the ability to borrow money. And therefore, they'll be willing to pay high interest rates to borrow that money. So in that environment, yes, I don't think that interest rates are going to have the same cycle that we see the market predicting over the next, say, 2-3 years. Because like I said, to get back to normal, in inverted commas, interest rates, we need about a couple of years of falling interest rates. If we are starting to see growth rates of, say, 4 or 5% a year globally, that's not going to be the scenario that occurs. Okay, thanks for joining me. I look forward to speaking to you guys again next week. Cheers.